What's up, guys? I'm going to do a breakdown of the E-mini. It's October 12th, 2023. It had a pretty crazy sell. I think this is very unexpected. This was yesterday, October 11th. We had a sell-off for about half the day, and then we rallied for half the day, and we actually broke out of the high, making a new high at the end of the day, which is pretty rare. But this does for October 11th give us the idea that bulls are still in charge, and they kept the gap open above the EMA. It kind of looks like a V-shaped reversal, but Al Brooks doesn't really teach that. He says it's a V-shaped reversal, but in reality it's like a head and shoulders reversal. There's lower highs. It's a minor, we're breaking trend lines, so he gets a little more nitty-gritty into it, and I kind of like that idea than just saying a V-shaped reversal, because things have to take place for a V-shaped reversal to take place. Like, sure, maybe once a year it goes straight up, but things have to take place for the V to actually happen. It's more like this, and that's kind of what we got here. So as of yesterday, it looks like bulls are in charge. Let's play the first 6 bars of today. First 6 bars, bears are putting in gaps right away. Bar 1 is we have a gap down and continuation. From yesterday's high to today is a gap down and continuation, and they put a body gap in. Right away, bears are demonstrating their strength. I'm gonna pull this out. Excuse me. So right away, bears are demonstrating their strength, and they make about 20 points off within like 30 minutes. Bears are strong, no bull bodies. We have one bull body around 6:55 a.m. PST, and it's more like a profit taking than an actual bull body. Bears tag the 20 points to start profit taking. It's an inside bar. We are at the bottom of support found yesterday before the breakout. It's a flag right here. And we found support there. We found buyers waiting. I think buyers are looking at this bar with their orders. I think there's more sellers from here. This gap down is getting continuation, so it's strong. We can view this as one big bar if we wanted to. That's what it's going to look like on the 20-minute time frame. Right away, we see the gap is getting respected. We could actually drag this down now that we have a bull, now that we have a high, kind of. It's about the gap, and it's getting respected. This was a nasty wick I got caught in. Bulls get 2 legs, so for the pullback, it's leg 1, leg 2, and a sell. Although this may not look like a leg, it is a bull leg, because for this wick to happen, the price had to move up and come back down. It just so happened on the 5-minute time frame it happened in one candle. On the 1-minute time frame, it could have went up, down, down, down. So that's their bull's 2 leg. They got their 2 legs, and the second leg failed because bears are demonstrating strength with this gap. Bear gaps are staying open. This is a bear gap, and now bull gaps are starting to get closed. This would be a bull gap here, and bears are already closing it. So not good for the bulls. After a rally like this, you would expect some sort of continuation, and I did, and that's how I got trapped. I thought this was great context coming off of this, coming off the previous couple of days. That's how the market traps you. So let's continue. This was a pretty nice setup. I was long around here because I saw leg 1, leg 2, and double bottom on support. So this, to me, was a bull flag double bottom. That's what I was hoping to happen, and I was looking for a new high to be made. With buyers sitting here in a breakout from yesterday became a buy the close rally. I thought this would be a credible long for a new high. This gap down with continuation is already telling us something. I overlooked it with my biasness, and I overlooked that bears closed the gap before bulls can close this gap. So although this is a double bottom with yesterday's rally, Maybe I could hold off for more information because now just even talking about it, bulls are not even getting consecutive bars. Something's wrong with this rally. Okay. Bulls push up, so now bulls are showing their strength and closing bear gaps. And see, I kind of like doing this after the market because we can see how this bear strength is shrinking. Just that doesn't mean we're bullish. It just means seller orders are getting absorbed. Look at this. What candle 2's wick shows us that there's still sell orders. This candle's wick shows us that there's sell orders waiting. And the bulls could not overwhelm the sell orders. That's why the market pushed back down. But then, as the market gets lower, bears cannot overwhelm the buy orders, and the market goes back up. Moves in rotations. Everybody gets a turn. So bulls are trying to close the gap. Bulls want this close, and they want a continuation of yesterday. Bulls are starting to put in market structure, but this gap is remaining open. The bear gap is remaining open, but now bulls have a gap as well. They have a gap here, and we're starting to make a bull channel. We could maybe do it like that if you'd like. I'm gonna delete this gap real quick. Delete this. We have two pivot lows, two swing lows, not pivots. So I'll connect body to body. Let's keep it simple. So we have a bull gap here. You guys remember the bull gap is showing signs for bulls, and we have a bear gap. When both sides are making money, are we trending or ranging? We're ranging. According to Al Brooks, 80% of breakouts fail within a range. Expect a reversal, so it's natural to expect that this breakout will fail. However, I am still learning how to trade, and I was hopeful that the breakout would continue, and it did not. Oh, I'm getting ahead of myself. Let's let the price action tell us. Okay, that's nasty. Nasty sell for the bulls. Very good for the bears. Bulls get their 3 pushes up. 1, 2, 3. Third flag fails at highs. High ones are not reliable trades at range highs. Don't take a high one. If you don't know what I'm talking about, check out Al Brook's website to learn what high one and high twos are. Very credible setups, but they take market understanding and context. You can't just take every high one. Like, for instance, a high one today right here in this range is bad. This is a bad trade because it's the third leg in a range. This also creates a bear flag wedge top with 3 pushes up, and it with an overshoot. Al Brooks talks about the market's overshooting. The market doesn't know where it's supposed to be until it's gone too far, and then it'll retract back. So we overshoot. We have 3 pushes up. This is becoming bearish because we have the bears in the whole way. This is interesting because the trend line does get respected, and you guys saw me project this one. So I tagged here and tagged here, and this got projected. And look at the biggest candle running, everyone stops. So we have bulls have their stops here. They make a new high. They move their stops. Bulls get long here. Their stop should be here. They make a new high. They move their stop here. They retrace. Then when this high gets put in, the market will move their stops to here. Major reversals and this is a whole another lesson. Okay, so very quickly, I'm trying to think what the most efficient. Okay, very quickly. Oopsie. Okay. When stop place, this is per Al Brooks method. I'm placing stops around market structure. I'm gonna actually do it like this. Market structure gets put in. We don't know if this is a short we don't know if they're shorts or longs. So when the market creates a new leg, we're gonna go to the long side in this situation. Okay. Oops. I'm gonna delete that because I want it to be. So now the market makes a new high. These bear stops are getting taken out with this bull leg. That's weird, lagging a little bit. Bulls now move their stop here because a new high is made. If a new high was not made, and we go like this, bears would see this and keep their stop here because they made a new low, so they know this is a credible sell area. Had they not made a new low, and maybe they go like this, See, if the bulls move, this is why you have to wait for a new high to be made, because now your stop's gonna get taken out because this is not clear support. People will move. Weak bulls will move their stop the second a higher low looks to be put in, but this is a minor reversal because a new high was not made. And remember, the market comes and hits your stop all the time because you have to wait for a new high to be made. See, so now we have two credible stops. You could put your stop here. Maybe you get taken out and you get long again, or you put it here. If bears will try and short this, thinking it's an overshoot, and they will go short here, but they never made a new low, so this is still bullish because they're not taking out market structure. So that's how you kind of play around with stops and traps, and it gets complicated when you start understanding where other stops are. You can start putting like sneaky orders there with limits. So that's what I'm trying to explain here with this sell, is that this ran everyone's stop all the way up to here. The weak traders probably got long here for a breakout and put their stop here or here. That's just a bad trade. If you're going to get long here, your stop has to go here, but I don't recommend getting long here because that's just a bad trade. I got long here, and that was a bad trade. Still did good today though. And yeah, so they get 3 legs up, and this is a good pattern to me. We have a bear flag wedge top. It's a bull channel. All bull channels eventually break out into a bear channel. All bear channels eventually break out into a bull flag. That's an Al Brooks term. I have to show you guys examples for it to make sense, but this is a good example right here in terms for the bull channel breakout. See, there's the bull channel, and they break out into a bit. If the bulls broke out, we would go like that, and it'd just be a double bottom bull flag, right? But no, this is a bull channel, and it breaks, and the bear flag breaks out. So these pushes up give it the bear flag appearance. Just like this is a bear channel, right? But the bull breakout gives it a bull flag experience or feel or look or charm. Does that make sense? I hope that makes sense. So we break out of the bull channel, and bears start selling. Strong trend is taking away. I think a lot of people got trapped because of yesterday's price action was very trappish. I got trapped very nicely looking at the bullish market structure, completely ignoring it's a third flag late in a trend and we're range bound. First 6 bars of the day is strong selling, no bull bars, so it's good to expect sellers are in control at highs. Fade the third flag in a range, failed breakout. This is a low 1, this is a low 2, and it's a worse price low 2, so we know it's a more credible low 2, and if it was higher priced, it could be a trap. Because you don't get to get a better trade and more information. You get a worse trade with more information because it's a worse price. So that's the trade-off in this situation. Huge bars. I can't remember why this line was there. Let me delete this line. Bears are giving back. Bulls are giving up a lot of ground and a lot of momentum. Wow. Look at that. So that's pretty nice for the Bulls. Bulls gave up not that much, like a 2 days worth of gains, but that's still a lot. You know, like no bull wants to see this in a bull trend. This looks like a real downtrend. This looks like bears are straight up like, give me my money. So yeah, we trend. It hits all the stops, and I think all the bulls are just selling. There's no support anywhere. I'm gonna turn off the bigger time frame. I'm gonna leave the bigger time frame on. Maybe there's support under the bigger time frame. Maybe this is yesterday we talked about it being dynamic support, so maybe there were some stops ran here, and it was just the perfect storm for stop after stop after stop after stop to get hit. You know, and look at that how steep that changed. It went from gradual. It didn't even go flat. It just bang. So bears are in control. Here at lows, bulls get one 10-point candle, which immediately get out of shorts. Like the bear trend's over. Maybe you get a dribble down. But remember, bulls don't make money in a bear trend. So if they're making money, maybe we're in a range. And yeah, they do make money. They make about 20 points here. We have a very strong trend, steady selling, sell the close, sell for any reason, sell the first reversal, sell because you can sell because there's a breakout, sell because you can't see any bull bars. Bears are making money 10, 20, 30, 40, 50 points in like an hour. That's crazy. That's a lot. We do see some flags here, and all the flags are just dribbling down. It's really like not that clean capped flag. Trade your smallest position size if you're gonna be trading. This is a weird thing. Okay, so people say don't sell low, but if we're in a market order entry, if we're in a stop order market and it's breaking out, you have to sell low because that's the trade. So the idea is to identify the markets correctly. It's not to not take trades. It's to get better so we can sell bull bars here. We can we can buy bull bars here and we can short bull bars here. Context, price position, momentum, everything's different. We don't want to sit here and be like, oh, this isn't my preferred whatever. This is what Al Brooks teaches us, is how to trade any condition. It's learning it, and it's going to take years to learn, so it's best we all get started now and start making money. 3 bars at lows. Bulls are making 20 points. Day's almost over, and this is a huge bear surprise. Let's just finish it. It's about 6 bars left. Bulls are making it back to the 50% level, which is interesting. So bulls get back to the 50% level of the sell. It's pretty credible. So now we're in a range, right? Because bulls don't make money in a downtrend. So bears made their money, and then we retraced to 50%, and we were right at a pinch point. This really sucks for like. It would be nice to close above it. Close like both EMAs closed. Instead, we are caught between both EMAs. This is just. I'm not gonna be trading tomorrow. I'm gonna take a couple of days off and regain. I passed a few challenge accounts, and I need to get good and just stabilize. So I'm just saying for myself, I think tomorrow would range, so I'm not gonna miss out that much. Yeah, this kind of sucks the way it closed. You know, it would be nice if even if the bears closed low, that's a little bit of direction for tomorrow, or the bulls closed high. That's a little bit of something, but we closed in the 50% of the 50%. What the hell? So be careful trading the open tomorrow. Don't want anyone to get slaughtered. Slaughter gang. This is just bad. Don't trade this. Barbed wire is bad. That's when barbed wire is like double tops, double bottoms, double tops, double bottoms, double tops, double bottoms. That's a day trader's worst nightmare. Don't trade that unless you're an experienced trader who can do limit order scalps for 1 to 2 points. So yeah, we just go over a couple patterns. We have a sell, a bear flag, a double top bear flag. We have a lower low double bottom bull flag, and then it fails. Well, it depends how fast you are taking profits. You do get that second leg, but you don't get the close. The reason I didn't take it is because I thought we were going to race up to here, and the market raced and turned around. They get their second and third leg. So we have one bull flag, and this is credible 10 points. And within this bull flag, they also get 2 legs. 1, 2, they get 3 legs. And then the breakdown. We get the double top, huge sell, stops getting ran, bear flags that you can hardly catch because they keep selling, and then bull momentum. The markets move off inertia, so the markets will keep doing what they're doing until a greater force comes along and stops them. In this moment in time, taking profits and buying lows was the greater force for the downtrend. And that was a 1 bar taking out 3 bars range. I think it's safe to get out of shorts right there. Let's go over yesterday's overall context. So this is where we're at on the daily chart. This is July 27th high, this is October 4th low, and this is the 50% level of the range. In ranges, I like to buy high. Yeah, in ranges, I do buy high. That's my problem. In ranges, we want to buy low, sell high. We're trading at the lower half of this range, so it's still a buy. But even within this range, we are above the 50% level. So maybe we see some sort of retracement and a pullback, or maybe we sell off. Maybe the market sees this as a double top, and this bar is what caused today's sell because we're right at the 50% level. So bears definitely see that. Bears haven't forgotten about this trend against this trend. Who has the more orders sitting where? Right now, this wick, today's wick, look. So they actually closed above the EMA. I think bears were trying very hard to get a close below, at like here, a close below October 11th low, or a close below October 10th low. But the fact that bulls kept the markets above the EMA and we could not close lower than the prior day's low, I think that's telling us something. I want to make sure I said that right. This was the prior day's close, but this was the prior day's low. And we breached the prior days. We made new lows today, but we couldn't close below it, creating a wick telling us there is buying pressure at below the EMA. In a range, we buy low, sell high. This leg does look strong enough to get a second leg up. It's just how far can we go, and how many sellers are waiting here. Are there more sellers waiting here, or more buyers waiting here to push the markets here? Right now I'm looking at a lower high and a double bottom. When we have a bearish pattern and a bullish pattern, we are in a range. Bull flag, 3 pushes down, and then we have this channel actually that I'm looking at. Kind of have, oops. We have this channel here. It's kind of wonky. Let me see. So maybe if we play that like an overshoot, that was the prior resistance ish. It's a little wonky, but you guys can see it. It'll be interesting to see what we get. We are stuck between the two EMAs on the smaller time frame. If you guys learned something, hit the follow button for more price action tips. I do these breakdowns daily. Also turn on the notifications because they're going to be premieres now every day at 3 p.m. Hit the follow button. Have a good day.